Peak Credit Union provides a foundational setup for small business owners looking to park their capital without getting eaten alive by immediate overhead costs. When looking at their Business Prime Share account, which serves as the baseline for all business members, the numbers offer a clear picture of what to expect. There is an opening deposit requirement of exactly $0 and a monthly fee of $0. However, the catch for anyone looking to actually grow their money is that the balance tier required to earn dividends sits at greater than $100, and it specifically requires a $100 minimum daily balance to earn those dividends. For businesses that need a secondary share to separate their cash flows, the business subsidiary savings account steps in with a $0 opening deposit, $0 monthly fee, and a balance tier for dividends starting at greater than $0. Both of these accounts offer free ATM usage at peak ATMs, but non-proprietary ATMs will trigger fees based on their separate fee schedule. The most immediate operational risk comes in the form of a $3 paper statement fee, though this can be completely wiped out if a business enrolls in e-statements or if the account belongs to a club, association, or nonprofit organization. Moving money into more fixed structures brings up the conversation around Peak Credit Union's certificate rates, which are documented as of June 22, 26. The institution heavily pushes its promotional certificate rates, where the 7-month, 13-month, 19-month, and 25-month terms all offer a flat 3.35% annual percentage yield. This flat rate structure across varying short and midterm timelines is somewhat unusual and represents a unique strategic choice for business liquidity management. Outside of the promotions, the standard certificate rates present a mixed bag of timelines and yields. The 3-month certificate starts low at 1.00%. From there, the 6-month term jumps to 3.25%, the 12-month certificate and the 12-month youth add-on both sit at 3.15%. Stepping up to the 18-month certificate gives you 3.10%, while the 24-month certificate offers 3.05%. Long-term parking options, specifically the 36-month, 48-month, and 60-month certificates, all flatten out at a clean 3.00% annual percentage yield. There is also a unique 12-month Save to Win certificate that yields 2.40%, which operates under strict official account and price entry rules for Washington or Oregon and requires the participant to be 18 or older. Evaluating the pros of these business savings options highlights a few solid pain point relievers for the budget-conscious entrepreneur. Starting a banking relationship with a $0 minimum deposit and 0 monthly fees on the primary and subsidiary accounts is an excellent way to protect baseline cash flow. It eliminates the constant anxiety of maintaining massive capital reserves just to avoid being penalized by the institution. The ability to run a secondary subsidiary account with no monthly fee and a dividend threshold greater than $0 is fantastic for organizing tax allocations or project-specific funds without extra costs. On top of that, federal insurance through the NCUA ensures that the principal capital remains secure. The promotional certificate rates of 3.35% also provide a decent, predictable yield for businesses that can afford to lock away chunks of $500 or more for up to 25 months. However, looking at the cons reveals where these financial tools might frustrate a growing business. The standard savings accounts require manual management to avoid minor financial leaks, like switching to electronic statements to bypass that annoying $3 monthly paper fee. A bigger drawback is the dividend threshold on the Prime Share account, since falling below a $100 daily balance means your money is sitting completely idle without earning a single penny. When it comes to the certificates, the interest rates are decent but far from groundbreaking, and the liquidity lockup is rigid. The biggest operational downside is that if a business needs to pull cash out before maturity, a penalty will be imposed for early withdrawal, directly impacting earnings. Furthermore, those attractive promotional certificates automatically revert to standard, lower-yielding terms upon maturity, meaning busy business owners who miss the 7-day grace period will find their cash automatically rolled into less profitable setups. In summary, Peak Credit Union offers a low-barrier, federally insured foundation for business savings that eliminates the stress of opening deposits and monthly maintenance fees. The primary benefits lie in the zero-cost account structures and the respectable 3.35% promotional certificate rates that help counter inflation. Yet, the risks are heavily tied to liquidity constraints and automatic structures. Locking business funds into certificates introduces the risk of early withdrawal penalties if an unexpected operational expense pops up. Business owners also face the risk of declining yields due to automatic renewals, where promotional certificates slip into standard terms if left unattended during the brief 7-day grace period after maturity. It is a safe, highly functional tool for steady capital management, provided the user stays digitally enrolled to avoid paper fees and carefully monitors certificate maturity timelines.